Hello, traders. It's 8:02 a.m. Chicago time on Thursday, the 31st of January 2019, the last day of the month. Remember, today's month end for the close. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we've got a mixed bag in front of us today. We do have a slight risk-off attitude. The Nasdaq is relatively stronger than its companions in the S&P and the Dow. The Nasdaq's up 15 points or so, 22 basis points. The S&P is off just about 2 points. The Russell's off 1.6 points. The Dow's down 82 points. The Euro stocks and the DAX are the laggards today. So it appears to be slightly risk off, but it just doesn't look to me like it has pushed very far. We've had okay movement overnight, but we're not able to get away from pushing the overnight lows in the S&P this morning. The leader this morning's gold, enjoying a strong pop following the FOMC yesterday, trading at $1,329.40, up about 14 bucks or 1%, a little over 1%. Crude oil at 54.60, up 35 cents. The bonds are up 21 ticks. That's quite a bit, and the 10-year notes are up 7.5 ticks. That's a fair amount as well. So that's where we stand. It looks like we're allocating slightly to risk this morning, or to safety this morning, with the exception of the Nasdaq. Looking at what the overall picture looks like, major U.S. stock index futures went up with Asian equities, which ended in the green. The Fed yesterday pledged to be patient with further interest rate hikes. There was the announcement was as expected, holding rates where they are. It's the fact that they removed some verbiage with regards to gradual rate hikes being removed is big news for the market. It seems like the Fed is pausing or curtailing its operations in increasing interest rates. European shares rose as strong earnings from Shell and rallying oil stocks helped offset disappointing results with Nokia and Unilever, and those are the components that are really killing the DAX this morning. A weaker dollar pushed gold prices higher. Oil extended its gains after data showed signs of tightening supply in the U.S. and as Venezuela struggles to keep up exports amid sanctions. And then we're looking for Amazon today, right? After the close today, it's a big one. Let's take a look at the review segment. As far as economic releases, we did get the continuing jobless claims this morning, and initial jobless claims we expected 215 got 253,000, so slightly worse. Expected 1.735 million on continuing, got 1.782, also slightly worse. We do get Chicago PMI at 845 publicly. The expectation there is 61.5. This can be a mover. Remember, with this product, it is a private number. Chicago PMI is a private number that goes out to members ahead of time. Okay. And then in addition to that, we get new home sales at, well, I'm speaking in Chicago times, I guess. It's 9:45 Eastern for Chicago PMI. Comes out at about 9:41, 9:42. And then new home sales comes in at 10 a.m. But we also need to pay attention around 8:45 p.m. this evening. We get the I don't know how to say this word, Kaizen something, manufacturing PMI. I know this is a major figure. It really moved us a few summers ago, caused a big correction. It's a key indicator, manufacturing indicator for China. Likely to be a mover, expecting 49.5 on that. Okay. Yesterday, We were opening in a gap up after 2 days of balance, and the primary expectation is for we were opening just inside the gap zone that was put in on Monday, which was also put in on Friday. And the expectation is for responsive selling to the prior high and then a likely pop up to 2661. And then from there, it's FOMC, probably FOMC time. And the expectation is it could go either way. The market was anticipating some decent news. We could see it in the movement early. That was the primary scenario. The secondary scenario is it pushes up higher towards that 2661, fails, impulses down, and then gets into the prior day's range. And then we wait for FOMC. I can't say that either one of these played out. You could make an argument for either, but overall, we did open, we did revert back. We dropped into 2646 before we popped through the 61 into 67, consolidated. A lot of trading at the IB high, VWAP, and VWAP and mid confluence here right before the release right here. Just a very nice setup here, except that it was coming into it was tapping that and it wasn't moving away and it was coming into the FOMC. There was no way to sit through that for about an hour and a half for it to resolve itself. And then once the FOMC came out, you could see this block here from about here to about here. All of that was FOMC. That was all in the same minute right after FOMC. So a lot of fluttering, a lot of strong movement to the upside, and then the market basically left us with a double distribution profile with a clear low volume node, point of control in the upper distribution, and finished fairly strong. The push into that 89.75 is just below the 12.12 swing high of about 90, 26.90. Put in a high up there, pulled back, and consolidated in the 2678 area, 2679 before we closed. So very interesting day, pretty strong finish on the day on a double distribution trend profile. The IB down here was quite small relative to the overall range. I mean, we tripled the IB range yesterday, again on a double distribution. It leaves us with some really clear characteristics here. I've got them marked in the master levels. Master levels are public. You can grab those if you have IRT. Just add a flex level and choose educator level, although I hate being called an educator. Educator level and choose FT71 master levels, and you'll get these levels here. But we can see that there's a single at 2674. That's where the singles begin. The single string begins, and then it goes all the way down to 2667 and a quarter. And so a drop below 2674 is I'm going to look to sell into 2667, which happens to be around the mid VWAP area of yesterday anyway. Currently, the market is trading right on top of the prior point of control, right underneath the prior close. And we've explored higher. So if we look at the overnight session, we'll see that we opened up and we explored higher. We pushed higher, put in a higher high. Now remember, this is an impulse move. Looks like it consolidated with a continuation, but it ended up putting a higher high yesterday, and then just went sideways with a downward skew. The overall profile is balanced in the overnight session with pretty decent volume. Again, a lot of the calendar was very busy overnight. There was a lot going on, and of course, earnings keep flowing in. So what we have is a market that has bounced overnight higher than the point of control left behind from yesterday. We're testing now the prior day's point of control, coming back into balance. But overall, it seems like it seems like the market's liking these prices up here and is holding on to the higher prices so far. Let me change this color. So what do we glean from that? Let's look at what we've done in the overall picture. Okay, so here's a chart um, of the daily. These are each bar here represents one day's trading in the RTH session, and so these are daily bars, and this is what we've done. We've popped pretty strong from the December lows, and we've trended up. We've come back. We've come back into the balance that we had in this region back here. The last time we were here, we've tested quite a few levels in the area, and we're still working our way into that key price above 27.35 and a quarter. To me, this was starting to look, given, if you recall and you were here, given how we behaved here with the pop up that failed and came back down to trade for 2 days before yesterday. This looked weakish and was ready to roll over into 26 into the 25.85 area, the last balance balance area up here. That's what it looked like. And then, of course, yesterday that we took all of that away, and we have a bullish breakout. Buyers are likely to try to sustain these prices up here to continue pushing. The big magnet up top, as I said, is 27.35 and a quarter. That is the most traded price in 2018. It's the most traded price in the region, really. So we've put in a trend, flagged, and then we broke out further yesterday. This looks slightly bullish to me. However, yesterday, given that it's a news-driven trade and it moved quite far, quite fast, I do expect some reversion, at least to pull back into that 72.50 and then 67 below. So we'll see how that goes today. What am I looking for today? Let me take a moment first to remind you that today there's an AMA of 4:30 p.m. Eastern on execution. We've received quite a few questions. We'll be able to parse through them and make sure they're answered in how they're relevant to execution. But there have been many good questions like how do you manage your stops once you're in? Um, what constitutes a setup? Things like that. And I think those questions are very important. Now, most people are more attracted to coming in and listening to someone talk about a system or some sort of a crossover or whatever. But the proof is in the execution. I mean, really, all your effort, no matter what it is, if it does not address execution, it's really not doing much for your bottom line. So that's what this AMA is for. The link is also available on my Twitter, twitter.com /futures trader 71. I'll be hosting this event. And then you can also find it in the description of the YouTube video in front of you. So what do we have for today? Tough call today. Big news yesterday. It is to me, it looks based on the effort overnight. It looks to me like we are likely to respond up, push back into the overnight point of control area, into this 26.82, 83 area, and then I'm looking forward to impulse down, take out the OS low, move below 2674, and start walking back to 26. This 2660, 67 area before we bounce back up. I'm treating this zone right here in between these singles, these two orange lines here. These are the beginning and the end of the single prints. I'm treating that as a gap zone. That's my primary scenario. The secondary scenario is one where we see that the market is not done exploring higher prices and looking for sellers. We did not. We found sellers yesterday on pretty good volume after we put in that high. We've pulled back, but very, very shallow pullback. So with that being said, I'm looking for an open that drops, pushes up, impulses up, consolidates in this area, and then starts to drift into the prior high to give us the continuation trade. The target above will be 2694, and if we get beyond 2694, we're looking at 2700, the century figure above there. Okay, those are the two main scenarios. There is, of course, the possibility that we have an open test up, drive down, and come back into equilibrium. The FOMC SOC, which means the scene of the crime, or the location where the normal auction was interrupted, that price is 2658.75. It remains on my chart until it's taken out, and generally it is taken out at some point soon after it's put in. So if we start to move down and we don't hold the single print, this becomes for scenario one. Let me change the color back so as not to confuse you. If we don't hold this 2667 area on the low of the single prints and this high that we put in before right after the right before the FOMC, then I'm looking for it to continue down, and my next target that I'll be pressing for will be 2658.75, 2659. That'll be the next big area. The better trade today is, yet again, the better trade is the sell trade. Is the trade that seeks to repair some of the pop that occurred on this FOMC announcement back into 2658. Just out of interest, so those are the two main scenarios. Just out of interest, here's what it looked like yesterday. Somebody asked me if I can post this, and I feel like it's better that I show it here. Here's what things looked like for the FOMC on a full depth feed. It's very interesting. I know many don't have this software, have similar software maybe, but it's very interesting in that we see this, when I see that there's liquidity that remains in the book until it collides with price, those areas always interest me. So the high of the day at about 2689.50, you can see there was quite a bit of liquidity, and it goes way back. It comes from way back, and we butted up against it and pulled back. When we see liquidity remain in place as price moves towards it, this is something I'll cover in today's execution AMA. This is important information to me, and so this is what the FOMC looked like. We had just to break down the moves. I talked about the moves, how these moves tend to unfold. To break down the moves, we had a move up. So the primary move was down, the secondary move was a pullback, and then we just continued. And so this primary move, whatever that high, whatever that low is, becomes a key indication of where I need to trade from on an announcement. This is for NFP, FOMC, or anything that is major, that is scheduled. Very important to look at this, because once I don't know which way it's going to go, it might revert back and fall to the SOC of 58.75. But if I see that after that first burst, it is continuing in a direction, then that's the direction I'm going to trade from. And if you're a convergent, I repeated in the Head Trader channel over and over again, don't short it. Don't short it. It is likely to continue. Don't short it. Don't be stupid. Don't give your money away. And I kept repeating that again and again and again. No reason to short it. There's quite a bit of strength that we saw on this move, and we broke this to the high side. So if you look at this right here, you'll see that the market pulled right back. That's pretty bad. The market pulled right back to that first trigger the first burst high. So there was a market order, a market trade that went off right up there, a bit of a collision, and then it pulled right back to it, and that's the opportunity I'm looking for. And then look to scale ahead of the size. This is a scalping kind of situation here once it triggers off. Where are we in terms of liquidity today? Here's the full depth. This is an accurate full depth. We see a lot parked at 2670, 2669 to 2670.50 or so. There's a lot parked over there and it's been there throughout the evening. You can see it started way back here and has gotten thicker and thicker as the market moves down. That's important. If this is an area for me to trigger off of, this input becomes very important. And above 2695 has had this liquidity sitting there for a long time. That's another area that's likely to hold on a first test. Of course, this is how I scalp. I look at the order book and I scalp liquidity, but I don't generally scalp the ES. But I thought this would be very interesting to tie in with our AMA from this afternoon. Hopefully you pick something up today. Good luck, and I'll catch you tomorrow. Take care.